My name is Harish Reddy. Today I am going to take you through Indian accounting standards, which we also call this as Ind AS. Till now, till your intermediate examinations, you have studied something called as accounting standards, AS. So till your intermediate, you have studied accounting standards. But you need to forget all this to enter final now. Because the syllabus is going to change and we need to converge from AS to Ind AS. So first we need to know what is accounting standard in the first place. Accounting standards are a set of documents which lay down principles for recognition, measurement, disclosure of transactions in the financial statements. So, who introduces these accounting standards or who prepares these accounting standards? Generally, the premier accounting body in the country issues accounting standards. So, in India, what is the premier accounting body? That is what you are going to study anyhow. You are becoming a chartered accountant. So, the premier accounting body in India is Institute of Chartered Accountants of India. So, I will say ICAI. This is the premier accounting body which issues standards. But again, who in ICAI issues the standards? The president may not be able to issue standards or he may not be able to have time to prepare also. So, in ICAI, there are specific boards for each item. Suppose you are a student, to take care of you, to take care of your examination and preparation, we have a board called Board of Studies. Likewise, for issuing accounting standards, we have a board in ICAI that is called as ASB, called as Accounting Standards Till now, the Accounting Standards Board of ICAI used to issue standards. And as on today, they have issued 27 standards. So, as on today, there are 27 standards available as per the Accounting Standard Boards, which need to be followed by a company in India. So, it is going well. So, what is the need of going to Ind AS then? So, I am already happy from 50 years, accounting standards are working fine. Then what is the need to go for something different today? The problem is every company in India follows accounting standards. Likewise, each country have a different set of policy. A company in United Kingdom follows a different set of accounting standard compared to me. So, for comparison between these two is difficult because both are following different things. Like in India, people are driving on the left side of the road. If you go to America, people are riding on the right side of the road. So, it is going to be causing a disconnect between people. So, we need to follow or change according to the global aspirations. For a small company, it may not require. But if someone wants to go global, or a company in America want to invest in a company in India, the first thing they do is ask your financial statements. A company from outside India came and asked your financial statements. You gave your profit and loss account and balance sheet. That is as per accounting standards, which the American company don't know. They don't know how you prepared. They don't know what to see. So, this is causing a disconnect between the investor and the people. That is why the government came up with this new process called I am going to follow the standard which is followed by the foreign country also. So, that is why I need to change from accounting standards to something different. So, where should we go? So, like India, we have Accounting Standard Board which issues accounting standards. There is an international body called as IASB, known as International Accounting Standards Board. This is located in UK. This International Accounting Standards Board issues standards globally. The standards issued by IASB are called as IFRS and IAS. It's not Indian Administrative Services. This is International Accounting Standards. The standards being followed by the foreign companies or global companies are IFRS, also called as International Financial Reporting Standards, and International Accounting Standards. For me to comply with global, I also need to follow something like this. Then only it is possible for everyone to understand the same. Whereas I am having a very old process. Okay? Yeah. Accounting standard. Yes. Fine. So this is with respect to ICAI's accounting standards and international accounting standards. So till here it is good. So now India want to use IFRS, which is again called as International Accounting Standards. Sorry. Yeah. So we are saying IFRS. To be global, you need to follow International Financial Reporting Standards or IAS. Now, this International Accounting Standard Boards have a policy that if you want to follow my standards, you need to follow in totality. You should not change even one small definition also. So, whatever is there in that standard, you need to follow the same. You cannot change anything. So, certain countries went ahead and said, yes, I am also going to follow whatever is there in the International Financial Reporting Standards. So, if a country want to use IFRS as is, they don't need to worry. Whenever foreign board issue standards, I will just go ahead and use those standards. But some countries like India, they don't want to follow the foreign standards as is. So, what we are going to tell is, I will follow IFRS but not in totality. I will take from them or I will copy the standard from them but make some changes which are applicable to my own country. Instead of following blindly what IFRS says, I will use them as a base and prepare according to me. So, there are two situations. One, follow as is. Whatever is written there, I will follow as is. Second is follow with changes. Follow as is and follow with changes. Yeah. When I am following IFRS, I can follow as is and I can follow with changes. The following with changes is called as convergence, whereas the following as is called as adaptation. Adaptation, and this is like I won't make any change. Whatever the international standard is allotted, I will use as is, that is called as adaptation, whereas I will make changes, that is called as convergence. And India as a country is going with convergence. So in India, I will go with India is doing this convergence. So I will take the standard, make changes, and then only I will use the international standards. IFRS. So what happens? I am saying if there will be a change. So if I change how it is known to the foreign country, so that is the problem thing. So in India, what we have done, the changes are categorized into three types: carve in, carve out, changes not yeah. So now if you see, what happens is you study IFRS. What is the difference between IFRS and Indian accounting standards? We call them as three types of differences. If you know one type of standard and you know what are the differences between them, you know both. Carve in means in IFRS there is something not there which you added. IFRS standard has it does not have a provision which you added, which means you brought in a new thing to the existing standard. That is called as carve in. I will give one example. You purchase a company with 100 crores and the value of the company is only 80 crores. So what happens now? Purchase 100 crores, net assets 80 crores. What happened to this 20 crores? This is called as goodwill. At the same time, and this is called as goodwill both in IFRS and Indian accounting standards. But if there is an opposite situation, like I purchased it for 80 crores, I purchased the company for 80 crores and the value of the company is 100 crores. If I ask you what is this 20 crores, what will be the answer? We call this as capital reserve. We call this as capital reserve. But there is no such provision as capital reserve in IFRS for this transaction. So the IFRS was telling this 20 you consider as a profit and book in your profit and loss statement. Whereas in India we are saying I will not consider it as profit and loss, I will consider it as capital reserve, which means this capital reserve concept is not there in IFRS, but still I am following in India. That is the called as carve in. Yeah, I think. Yeah, that is called as carve in. Okay. Yeah, carve in. So which means add items which are not originally there in IFRS. Example, capital. Example, the capital reserve on acquisition. The second type of change is carve out. It means to cut out. So there is a provision in IFRS which you removed. Here the example is fair valuation. IFRS says on each balance sheet date you need to do fair valuation of your assets, which means you are increasing the value of your asset. For example, I purchased, or not me, maybe my grandfather purchased a 1 acre in Malakpet, say for 20 lakhs, and now it become 2 crores or 20 crores. So As per our accounting standards, we still show it as 80 lakhs till the time I sell the asset. But IFRS was saying you need to revalue every balance sheet date. So in India, we don't want to take this. So fair valuation not adopted. Ind AS. Ind AS. Part of the original IFRS, which means there is something in the IFRS which I am not following, is called as carve out. So there are certain items you added in IFRS, there are certain items you removed from the existing IFRS, and then there is the third section called as changes not resulting in carve in or a carve out, which means you made a change but that is not going to impact your balance sheet or P&L account. For example, like definitions. In IFRS or in International Accounting Standards, the profit and loss account is called as statement of total comprehensive income. Whereas from our childhood we are studying it as profit and loss account. So instead of changing the name to total comprehensive income, I will keep using statement of profit and loss account. Nothing will change, amounts will be same. Same way, in IFRS, the balance sheet is called as statement of affairs. But I am using the word statement of balance sheet. So I don't want to confuse my people. So I will not change this, which means there is a difference between IFRS and my standard, but that does not include any issue. So this is basically definitions or names not having impact. These are the differences between international standards and our standards. So suppose you are studying CA final and you studied all Indian accounting standards, and you go for an interview where the interviewer is asking, do you know IFRS? Can you tell confidently that I know IFRS, or you will say, no sir, I know only Indian accounting standards and I don't know IFRS? So what is going to be your answer? Yeah. If it is my answer, I already know Indian accounting standards and I know what are the differences between Indian accounting standards and IFRS. So I can confidently say I know International Financial Reporting Standard also. I just need to see the differences between both and apply. Now we'll see about the naming of the standards. So the earlier name was accounting standard. This will keep continuing, so I cannot touch this name. Then I need to name this as something else. So I wanted to name this as Indian Accounting Standards. But tell me, is it also not Indian? This is also Indian, this is also Indian. Because AB issued, this is also issued by ICAI 50 years back. But we are just for our convenience, we are calling the first one as accounting standard and second one as Indian accounting standard. And this is abbreviated as AS. I need to name something to this also. Can I name it as IAS, Indian Accounting Standards? Can I name it? No, because there is something else called International Accounting Standards. They are also calling themselves IAS. If I also call IAS, this will complicate things. So instead of naming IAS, what our government or our ICAI is calling this as IND AS. It is called as IND AS or Indian Accounting Standards. Whenever you write, I should be capital and ND is small and AS again is a capital. So this is the differentiation between the Indian Accounting Standards and International Accounting Standards. And how the numbers are given, we can see. as I am following completely the international standards, I need to follow their numbering itself. So if there is a standard called, and initially I have told you international standards are of two types. They call as IFRS and they also call as IAS. So what are we going to do with these numbers? I cannot have two sets of numbers. So if a standard has IAS, it says IAS 02 or IAS 10. I will name them in India as IND AS 02, IND AS 10. Whereas if a standard has IFRS, suppose IFRS 16, this I am going to call it as IND AS 116. So wherever IFRS is there, I will add 100. Say IFRS 10 for example. I am going to name it as IND AS 110. For IFRS I will add 100. For IAS I will show same. IAS 2 will be IND AS 2. IAS 10 will be IND AS 10. Whereas for IFRS 16 it will be IND AS 116. So that you don't need to worry about the numbering also. Then who should follow these IND AS? Because there is a small company which is existing from 10-20 years. They are using your old accounting standards from almost 20 years. Do they really need to change to IND AS? It's not a very easy task to change for the first time. So the thing is, the initial purpose of bringing this standard is to go global. So if I have a small company with 1 crore turnover, I may not be able to go global, or a company from outside India will not come and buy my company. So I don't need to worry about IND AS or accounting standards. So whatever is happening, I will continue as is. But if a company is big and it is having a capability of going global, then that needs to be adopting accounting standards which are in compliance with global. So further the government come up with a phased approach, like who should follow IND AS. So we have discussed about the Indian accounting standards, the difference between IFRS and Indian accounting standards. So with this, I would like to close the session. To know more, please see the number given on the screen and reach us for CA and CMA coaching.